Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the last of the major breaking news of this week. And this is the wholesale side of inflation. The producer price index for December expected to be up 0.2, and this is not good news. Up 0.5%. Up 0.5%.
So, this morning, I called it. Last night, I called it. Even in my forecast for where rates are going to go this year, I called it. I call it the January effect. Why? Well, I think that's what's happening right now. If you're watching rates right now, you might be a homeowner, home buyer, realtor, or loan officer trying to figure out what's going on with these each day. I got some great news for you today. It might not be what you want to hear, but we got inflation that actually came in much higher than expected. But the good news is these things didn't move. Why? Well, that's what we're going to get to in a second, folks. My name is Dan Frio. I'm actually the host of the Rate Update. And my goal each day is to come and explain to you guys what the heck's going to happen with those today and why. So today we're going to go back to Rick Santelli. What happened this morning is producer inflation came out, and it was much higher than expected, but not what we expected. If you remember this morning, I said, don't be surprised if that producer inflation comes up maybe 1, 2, 3 ticks higher than expected. And I also predicted that last night, and I even put this, what I call the January effect, in place in my real estate updates for 2026. You're wondering what I'm talking about? Well, let's get back to Rick to show you where the producer inflation numbers are coming in. I'm going to show you the whys, but the interesting thing is mortgage rates didn't move, and also gold. Isn't gold supposed to tell us where inflation's going? Well, actually, gold crashed today. So if inflation's so bad, well, why did rates not move, and why did gold plummet? Well, let's go over to Rick and see what he has to say about this.
That would be the warmest, and boy, we have to go back a bit here. That would be the warmest since SEP of last year when it was up 0.6. Strip out food and energy, it goes up 0.7. This is over 3 times what we were expecting. Up 0.7 would be the hottest since July of last year when it was up 0.8. Now, if we look at X-Energy, food and trade, it's up 0.4. Hey, that's at least only 1/10 away from expectations, and that would be the highest level since October last year when it was up 0.7. Now, we're going to go from month over month to year over year. Year over year, expecting 2.8 on headline, comes in at 3%, equaling exactly our look last month.
So here's the question that I got. Everybody's going to freak out and say, here it is. Here's that tariff inflation. Well, I'm not disagreeing with them, but the question I have is, then why didn't the markets really move? If we go over to mortgage rates, if this is so bad on inflation, you're thinking, okay, mortgage rates are going to skyrocket. Well, they didn't move. Why? Well, you'd ask the same question if you go over to here. We look at gold. Gold is our hedge against inflation, right? Why is it down almost 10% today? Well, these are the things you sit here and you scratch your head. So maybe this was predicted by some of the economists, but just didn't come out and tell you. I don't know. But how do I predict this? I'm just a mortgage guy out here trying to help you guys out. And speaking of that, folks, my name is Dan Frio. I'm actually the host of the Rate Update, and hopefully you subscribed to my channel and you checked out my forecast for this year and even the last few years. But if you're a homeowner right now, I got a tool for you. And then we're going to go back over to where I think things are going to go, and we're going to look at gold and the bond market here in a second. But if you're a homeowner and this is driving you nuts, saying, okay, I'd love to refinance. I think rates are going to go down a little bit, but I just don't know what to do. Well, put your information right up through there. Okay, what I want you to do is plug in all your information. Give me what rate you'd like to refinance or how much you'd like to save each month. And when those two things hit, I'll call you, I'll text you, I'll email you. We don't sell the data. I monitor it daily. So check that out. But here's the interesting thing that came out today. We had these numbers, and here's what the producer inflation numbers came in at. The last report was going to be 0. Well, I looked at these things earlier, and they were all at 0. And this is why I said, okay, I think this is going to be higher than this. Well, it came in much higher than that. Okay, all these across the board. So this is the area right through here. I said, well, okay, it's going to tick up, and that's exactly what you're seeing. So here's what I'm saying with my January effect. If you're new to the channel, I'm saying producers got hit tariffs. I know tons of people in manufacturing, auto, steel business, and so forth. They're like, yeah, we got hit with tariffs. Plus, this also gives us a little margin things that we can do. So here's what they did. They're like, we can't push these through in 2025. It is all over the radar. So what we're going to do is we're going to wait till 2026 and start pumping these things through. And then you have the big, beautiful tax bill that they call it. That's going to have more and more refunds. It'll be absorbed into the system gradually. We increase those shortly, but now we have to really hit it. That's what they did. So I'm thinking inflation's going to uptick, abate 2-3 readings. And then as soon as that hits, and if we can keep oil down below maybe $60 or close to that, and you have the housing equivalent rents dropping, you're going to have all this come through. And by Q2, Q3, we're going to have inflation actually coming down. If you don't believe me yet, folks, check out my forecast from last year, my forecast from this year, my last few videos. We've been nailing these things. So join me each day where I can explain to you guys what's going on with mortgage rates. So here's what I want to explain to you. Go over to gold. Again, why is gold down 10% if this is that bad for inflation? So that's why you got to sit here and scratch your head. So if you need help with this, trying to understand where rates are going, if you're trying to look to buy a house, seeing if you can qualify, or maybe even refinancing makes sense, join me each day. Subscribe down there. I come in each day and explain to you guys mortgage products, what's going on with interest rates, and hopefully I can help guide you through maybe looking to buy that first house, or maybe you're looking to refinance to save some money. I'd love to help because my main concern is to help you guys understand real estate, especially the biggest question you probably got. Dan, what's going on with those? And why? So hopefully today I understand a little bit more, but man, we nailed it on that inflation numbers. But the good news is the rates didn't even move today. Is it really inflationary long term? We're only going to have to sit and wait. Thanks for watching, folks. Subscribe, and I will see you Monday morning at the opening bell to see how this stuff starts another week, and hopefully we don't have a government shutdown. So I'll see you on Monday. Take care. Bye-bye.